great background. You're all ready for this.
Yeah, I actually had another background similar, but I was taking it off, putting it on walls, taking it off walls. So the other day, coincidentally, I got a new one. So it's perfectly new again.
Awesome. So, Ronan, tell us a little about yourself before we dive right into it from the Wall Street Silver community. Tell us a little background about yourself.
Okay, well, I've been working for BullionStar in Singapore for around 5-6 years. I initially started as a consultant, just writing reports and so forth. And BullionStar had seen my work working for a company in Dublin called Goldcore, who are also a bullion dealer. And I was approached by Jan, who already worked with BullionStar in Singapore, and he said, "Would you like to come on board?" So that was the beginning of my work with BullionStar, and then it led to being a full-time precious metals analyst, as I am now. And before that, I actually used to work in London. I worked in Morgan Stanley in London, Dimensional Fund Advisors. So I worked in London for like 10, 11 years. And it was only because of my personal interest in bullion, in gold and silver, I got to know the guys in Goldcore, and then one thing led to another, and I switched to the bullion sector.
Nice.
As probably a lot of people will identify with that, something like a passion for bullion starts, and then you eventually end up working in the sector.
That's pretty awesome. Now, the first question from our Reddit community, Wall Street Silver on Reddit, is Anonymous Austrian. At what rate are 1,000 OZ bars being drained? Where will the industry source the metal if 1,000 OZ bars supply begins to thin out?
Well, at the moment, speaking from BullionStar's perspective, we always plan strategically for an event like a high demand and a short supply situation. So we stocked up our inventory of all different products in silver, both coins and bars. And we still have quite a lot of inventory compared to the American and Canadian dealers, but that will run out quite soon. And the problem will be replenishing that, as you say, because it's very difficult to get new stock. We have some relationships with various mints refineries, Heraeus, and also different distributors like Amart, Dillon Gage. But we are also going to find it more difficult to get new stock when the current stock runs out. And that's because of the bottlenecks all the way back through the wholesalers, the refiners. So there is new silver mine supply, and there's always like 25,000 tons of silver coming in from the mines and about 4,000 or 5,000 tons in recycling. So it really depends on how that can go into the mints and refineries, and whether, because of the fact that they've been cleared out, they will need time to fabricate new material and allow that to go through the supply chain. But as regards the premiums, I'd have to double check on the premium for the silver bar on our website, but we are seeing premiums really sky high, and that's basically supply and demand. And it really goes back to the fact that, is it logical now to have physical product priced based on a spot price, which is a fantasy artificial price? So like the price of gold and silver has always been discovered, or in other words, established by LBMA trading in London and in COMEX. So when you have a situation where that's nearly predominantly paper trading, that is determining a price, which has nothing to do with what's happening in the real world. So when you have a spot price and you have a high premium, really what it's saying is that people don't have confidence in the spot price because it's not reflecting the reality of the physical market.
Yeah.
Now, Ronan, Jim Lewis talking here. You gained a lot of internet fame for your article that you wrote a few days ago. It was even picked up by Zero Hedge and had tons of views. And the title of your article was, "Houston, we have a problem. 85% of silver in London is already owned by the ETFs, by SLV, and 9, or how many others are there, major ones that you track?"
Well, overall, there's about 13 others, so there's 14 in total, but together they're offered by about 6 providers. And that number has increased recently in the last few years because most of they used to be run by iShares and ETF Securities and Deutsche Bank. And then in 2017, 2018, ETF Securities sold various bits of its businesses to WisdomTree and to Aberdeen Standard. And another group called Source, an English London-based company, sold its Source ETFs to Invesco. So it's a bit difficult to remember all of this, but if you just remember, like, you have iShares, WisdomTree, Invesco, Aberdeen Standard, and Deutsche Bank. And between them, they have 14 ETFs. The big one, obviously, is SLV, but it's important to remember that it isn't the only one.
Yeah.
Where SLV last week had 20,000 tons. The other ones together had 8,000 tons. So it's not immaterial, and it's important to remember the other ones also.
Well, something I think that stood out in your article that a lot of us appreciated was you really seem to digest and know where to go find the fine details of where the silver is, which vaults, which custodians, and which ETFs have their silver and where. And you came up with this figure of 85% of the silver is already owned and accounted for. So all the paper, I think the gist of the article was all the paper trading of silver out there, at least in London. We didn't really address COMEX in New York in your article, but at least as far as London's concerned, they're only playing with a really much smaller portion of the silver that's in the vaults in terms of all the paper that's going around trading. And that's sort of the concern of, you know, what happens logistically in the silver markets if, you know, I think at the end of January, early February, there was a huge boost in what SLV was reportedly owning. It jumped by 110, 111 million ounces in 3 days. And I think that boosted their claims in London from the 60% range, or the total ETF ownership from the 60% range up to the 85% range. You know, can we speculate at all logistically? Does that create problems in London? Or like what happens logistically if it reaches 95% or 101%?
Well, yeah, if you think about it as an equation, the LBMA every month comes out with a figure, which is a 1 month lagged figure. So at the end of January, they came out with the end of December figure, saying that there were 33,600 tons. So what you do is you just take that figure and you work backwards by adding up all the ETF holdings. And as you said, at the end of December, the ETFs had between them about 20,000 tons, and that jumped up to nearly 29,000 tons in the first few days of February, mostly due to a surge in late January, early February. So it boosted the percentage ownership by the ETFs of all the silver stock in London from about 63% up to 85%. And actually, just before this call, I was doing quick back of the envelope calculations, and it hasn't really changed very much. It's about 83.5%. Mostly because about 1,000 tons has come out of SLV in the last few days, 4 or 5 days. But the other holdings of the other ETFs haven't really changed very much in total. But so what I was noticing was that on the SLV bar list every day that you look at since the 28th of January, they used to have their holdings in like 2 JP Morgan vaults, London and New York. 1 vault in Brinks, which they call Brinks Central C, and I think some smaller amounts in Malcolmit. But over that big surge in the few days at the end of January, beginning of February, they added not only 1, but 2 more vaults of Brinks, which were called Brinks Premier Park and Brinks, it's in Radius Park near Heathrow. They call it Vault 7. And then they brought in Lomas as well. So it was literally a case of the banks seem to be looking all around for any silver they can find in these LBMA vaults in London. So including like JP Morgan, Brinks, Lomas, Malcolmit. Oh, actually HSBC has a vault as well. They were going, obviously they're getting access to this metal, but then the question is have they changed ownership? Are they leasing it? Have they borrowed it from somebody else? Because who in their right mind would really sell a few thousand tons of silver in a day when it looks like the price is going to break out? Like a profit maximizing holder of silver isn't going to do that. So getting back to your point about what would happen if it went from around 85% to 95%, that's only a few more thousand tons, because we don't really know who is speaking for 4,000 or 5,000 tons that are not in the ETFs. But some of that obviously must be institutions, family offices, high net worth individuals. There could also be other large holders that just aren't on record. They don't want that transparency. So pretty quickly, it could get to a stage where there isn't enough metal for all of these ETFs to compete between. SLV, due to its prospectus and the way it operates, has to convert its dollar inflows into silver to get allocated by the end of the day or the next day. There seems to be a one-day lag compared to the bar list and the overall figure on the iShares website. So the other ETFs, interestingly, don't every day, even if they might have inflows, they don't buy physical, but they might do it every few days or at the end of the week. But I could envisage a situation where they might have to change the rules of the prospectus in an emergency and say that because of the fact, they wouldn't say it out straight, but they might say that they're changing the rules of their prospectus to make it more flexible and an SEC request on an emergency basis.
Well, you mentioned the 110 million in 3 days that happened in January and early February. And a lot of us have speculated that, you'd think in a rational buyer-seller relationship, the seller no rational seller would say, yeah, 110 million. Yeah, you can have it all at the same price. A logical seller might say after, hey, the first 25 million, maybe I should lift my offer price a little bit here. These guys seem to be buying a lot. And that didn't seem to happen in that huge, purchase period.
Yeah, and that leads me to believe that the metal that flowed into SLV, assuming that it was real metal and not just some sort of book entry, the fact that it came in so easily onto the bar list suggests that it's owned or controlled by the bullion banks in London, the LBMA banks, and they just together allowed it to be transferred in a sort of firefighting way to absorb the need of SLV. And I think that it occurred to me when I was writing this article at the end of last week that it seems as if they torpedoed the silver price so as to try and dissuade further inflows into SLV.
Yeah.
That they couldn't just allow this to continue, this torrent of inflows happening. So by dampening sentiment or like breaking sentiment, they succeeded in stopping the inflows, but they've only been very small outflows. So they've sort of kind of put a dam on it for the moment, but it wouldn't.
They're still probably in that high 80%, in that low 80% range, even with the minor outflows.
Yeah, it's like 83.5%. So I did my quick calculation shows there's like, if you include bullion vaults and gold money who have around 600 tons between them, there only are just around 5,000 tons that are not spoken for by what you call transparent holdings. But we have to factor into that other holders like high net worth institutions. So that could be like 40 million ounces, which would be like 900 tons, I think. People that I know in the bullion industry were just speculating about those sort of figures, which could mean like 3,000 to 4,000 tons are there, are in some ways available. But obviously we'll then have to think about, are they bringing silver in, flying it into London or bringing it in on trucks and ships in the last 2 weeks? It'll be interesting to see the LBMA reported figure at the end of February. It will be probably the 1st of March. They'll report on the end of January, the figure for the end of January.
Awesome. Now, Ronan, we have another question here from our Redditor. The Banks is, while many stocks and commodities, including other metals, are making all-time highs, silver lags substantially. Even though there is massive retail and investment demand, industrial demand will also rise a lot in the coming years. Why is the price of silver still that low?
Well, from my analysis and research over the last number of years, and it's always use the same perspective, either it be gold or silver. I did the same ETF calculations for gold initially in 2016. And that allowed me to do the same one I did it first time for silver in 2017. So literally both gold and silver, the prices are established in LBMA and COMEX. And these prices are based on trading of gold credit, silver credit, unallocated synthetic paper gold, paper silver, and futures derivatives. So they can create these things limitlessly. There are no limits on the ability to create paper, gold, and silver. So, like, to cut a long story short, the prices are low and not reflecting QE and money supply increases and fiscal stimulus, because the prices aren't because they're established by the dominant trading of bullion banks. So if you look at a few weeks ago, coincidentally, I did an article about the inflation-adjusted prices of gold and silver.
Yeah.
And I used the data from John Williams' ShadowStats website. And what he does is use a CPI methodology that the Bureau of Labor Statistics used back in 1980. And then he explains that over the years, due to political pressure, the BLS had to change their methodologies to try and minimize the monthly and annual CPI. But if you use their original methodology from 1980 and apply it nowadays, and then back inflation adjust old prices back into the past, the silver spike in 1980 on an inflation adjusted basis is $966. So even if you use the more recent BLS CPI, the price is around $140 for silver. So the current prices of gold and silver are not in any way reflecting either the Bureau of Labor Statistics' own current methodology or even their, more importantly, their previous one. And I think to answer the caller's question, or the Reddit person's question, it's because the prices aren't based on reality. They're a fictional trading price that comes out of the kind of fraudulent paper trading of gold and silver.
You, your article focused mostly on the London vaults, but do you have any sort of similar numbers or ideas on what's going on in the New York vaults for COMEX, or in terms of how much real tradable silver is there and who owns it? And are they in a similar position?
Well, the majority of the ETFs have their silver and gold stored in London for whatever reason. It's because of LBMA. London was always the dominant market. But the SLV has a portion of its silver in the JP Morgan vault. And interestingly, when I was running those numbers, I just suddenly dawned on me that in COMEX, you've got around 12,000 tons of silver at the moment. Around 3,800 tons of that is in the registered category, which means it already has warrants attached and it's been already traded, or else people are willing to have that traded. The rest, which is around 8,400 tons, is eligible. And all eligible means is that it's in the form of a 1,000 ounce bar, and it could, it will work for trading if the owners wanted it to be traded. But a portion of that eligible is the JP Morgan SLV silver, because that's all in the form of 1,000 ounce bars. It has to be based on the prospectus. But I haven't done a specific analysis of the ETFs that hold their gold in New York or else Canada. iShares has a Canadian fund, a smaller one, which has some of its silver. It used to be with Scotia in Toronto, and they've just recently changed the custodian to, believe it or not, the Royal Canadian Mint. So I want to do that quite soon in the next week or two, do a similar analysis for the ETFs which hold their gold in New York. But overall, I think there's about 1.6 billion ounces of silver in transparent stocks around the world, including COMEX, TOCOM, all of the ETFs, and a few other things like PERT Mint certificates, Royal Canadian Mint products. And out of that, about like 33,000 tons, is about a billion, or 1.1 billion is in London. So that would leave about 500 million outside London. So that's important as well. It's just that I haven't yet got to analysing that. But I think that it's important to realise with the COMEX eligible inventory that a lot of that isn't available. It just happens to be silver that people have stored in the 9 or 10 vaults, which are COMEX approved, including
at the right price. All the silver is available, though. It just has to.
Oh yeah. At the right price, all of that is available. But just at the moment, it's not. Being on the COMEX report doesn't necessarily mean it's anything to do with COMEX. It just means that as part of the CFTC regulations, the approved vaults, when they get approved, they have to send daily reports saying how much gold and silver of the approved types, like 1,000 silver, 1 kilo gold, 100 ounce gold, is there in their vaults. It's just a sort of rule of CFTC. But a lot of people don't think that eligible gold means it's somehow part of COMEX trading. It has nothing necessarily to do with COMEX, but it could be because it's in the vault and it's in the right weight.
Awesome. So we have another Redditor here for you, Ronan. Johnny Boy Tango is saying, how much silver is 5% of front month silver? Because you tweeted, if more than 5% of contract holders of front month silver take delivery, it will likely cause significant problems for the exchange. So how much silver is 5% of front month silver?
Yeah, that was a Kyle Bass tweet from last night. He commented in there with that about if 5% took delivery, it would cause major problems.
Oh.
So is he talking about 5% of COMEX or 5% of London?
He was, in his tweet last night, he actually joined our conversation on Twitter, Kyle Bass, and he was an old video of his where he made a comment about gold because he was taking delivery of $1 billion in gold from COMEX. And he was commenting that typically it's rarely more than 1% take delivery. Yeah. And his comment was, if 5% took delivery, COMEX would have big trouble. And, we're looking at a situation where March, next month is a physical delivery month for COMEX. And I'd be shocked if they don't set a new all-time record for physical delivery next month at COMEX. And people are just wondering, do they have it?
Yeah, well, I can take that question because I can try and do some quick calculations in my head. So there's a little bit less than 4,000 tons in COMEX in registered category. So of that 4,000 tons, that's 200 tons is 5%. But even on this month, the February silver delivery, the stats for the February delivery of silver contract, the SI 5000, that's already got 257 tons worth of contracts standing for delivery. So really all that means is that the warrants change hands. It doesn't necessarily mean that any silver moves out of the vault. But so February isn't even an active month. March, I should say, is the next active month. So it will be interesting to see what happens in March. Because so if you took so if all the silver that's in registered category was people wanted to start for delivery of that, that would be like 3,600 tons. And what you usually see, it happened last year with gold because there were huge deliveries in in April and June and August and November, I think. And you could see more and more gold went from eligible to registered. But a lot of the times, it's banks that are, the warrants change hands between the big banks. And it's not really clear on the issues and stops report about the warrant deliveries. Who are the people that are parting with the silver and who are the people that are taking delivery of it? Because all they're doing is changing warrants. What we need to look at is, will people start taking the silver out of the vaults, out of the approved COMEX vaults? Because if they do, it will suggest two things. One, that there will be a run on the silver, and secondly, that they don't need to leave it for trading in the future. They won't leave it in the COMEX vaults for trading. If they take it out, it means that they don't care that it's outside the chain of custody anymore.
Well, I guess it's all about whether it's going from, paper hands to diamond hands in terms of who's holding the silver.
Yeah.
And, that's, the terms we like to use online. And I think one of the, things like Sprott, Physical Silver Trust, they're a closed-end fund. We call them an ETF, but they're not really. It's a closed fund. I think when they buy silver, it's a long-term buy, whereas SLV or some of these others, it's more in and out more easily in terms of the holding period of the silver. I think a lot of us have the impression that when Sprott buys, I think they're authorized for 1.2 billion in their latest offering, and they've still got 34 million ounces to go on their purchasing. That's just my paper napkin math. And so that's do you sort of consider when Sprott Physical, when their fund buys silver, it's like it's taking it out of the available reserves?
Yeah, for sure. I mean, Eric is he has a very good conviction as regards his funds, and both for gold and silver. I remember back here, I think it was 2010, when the IMF announced that it was selling gold on the market. Apparently, Eric Sprott went to the IMF and said, "I want to buy that gold." And they didn't. They told him where to go, because obviously they weren't really selling it to the open market. They were probably selling it to a different bank. So Eric had that story about it. And I think that that shows, that's a good story for highlighting that Eric's passion for taking gold or silver and taking it into diamond hands, so to speak. So I think Eric could be one of the people that might be very key and instrumental in the next few weeks in trying to play the cards and put his cards on the table and said, "I want delivery." Even if you went to COMEX, that could be a trigger for other large holders to see, "Oh yeah, Sprott's doing this, we better do this as well."
Now, we have another question for you, Ronan. It's called, the Redditor is Holy Smoke. How much leverage do the market makers have over miners, mints, and retail bullion dealers? Do they possibly control the entire silver chain?
Well, I think they control nearly all of the mining companies and the refiners, because all of the refiners are actually members of the LBMA. But starting with the miners, the bullion banks in general, we call them bullion banks, but they're literally all the Wall Street and London banks, like HSBC, Goldman Sachs, JP Morgan. They're very much embedded with the mines and financing these companies. And from a gold perspective, Chris Powell of GAPA is always saying that mining companies don't really have the guts to go against the bullion banks, because they understand that the way that the mines are financed, it's by the bullion banks. The banks buy the output of the mines on a long-term basis, long-term contracts. So I know Barclays and Deutsche Bank are not as involved in the precious metals market as they used to be 4 or 5 years ago. But for example, Barclays, I remember doing some research on gold companies like like some of the big gold companies like Barrick, and they're very much involved in financing them and buying their output. And then the banks own it and send it to the refineries in Switzerland and then take delivery again and bring it to London. And I think the same thing happens in silver. So as regards the miners, so yeah, the answer is that the banks are very much in control. As regards to refiners, that's the same way too, because the LBMA is self-styled. They call themselves a global authority of precious metals. And they're top heavy with all the banks as members, but they also have all the refiners as members, like PAMP, Metalor, Argo Heraeus, Valcambi, and some of the LBMA has a board, like it's structured, and various members of representatives of banks and refiners are on that board. So some of the people from the refineries like Tanaka and PAMP are on the LBMA board. So that's the second part of the question. The refiners are very much in a difficult position because they are part of the LBMA and they're very much colleagues of banks. I think the wholesalers and the retailers are a different kettle of fish. They're more independent, and they're the people that we can see now are making shouting the loudest about pointing out the fraud in the paper markets. So like Amark, Dillon Gage, MTP maybe not so much because they're owned by PAMP. Maybe like CNT and the depositories will also be more independent. And I know all the bullion dealers around the world are very independent, like ST Bullion, James, you had James Anderson on the show earlier. And we like my boss, Torgny, who is the CEO of BullionStar, Torgny person, is very much of the philosophy that we want to provide independent research. We want to point out things that maybe analysts in the big Wall Street banks and London banks can't say, but they'd like to, but they can't. In the same way that the World Gold Council and Metals Focus and Refinitiv, who used to be Thomson Reuters, they write these huge reports about gold and silver, and CPM Group, but they never say pretty obvious things because they know that all their sponsors are from the banks and the refineries.
Yeah.
And all of they sell their reports to all the banks, so they obviously can't criticize too much.
Well, let me ask you another question along those lines. If all the, how do I want to phrase it? I've been taking another Redditor question. I want to think of how I want to phrase my next question to Ronan.
No worries. So we have here, Ronan, 8Zap10 is saying, "Hi, Ronan. Thank you for sharing the silver inventory situation in London. Suppliers are currently using the future spot price as a benchmark to sell their stock. We know that the future spot price is heavily manipulated due to paper trades. At what point will suppliers break away from future spot price and sell according to free market price?"
Well, that's a very good question, and it's something that we've been thinking about in BullionStar. And the same thing nearly happened back in March, April of last year when there was a blowout in the spread between the London spot price and the COMEX futures price in gold. And there was a huge demand surge in gold. And at the same time, there was a supply bottleneck and a supply shortage because of the lockdowns of the refineries in Switzerland and elsewhere. In a similar but slightly different way now, we see this in the silver market. There's a huge demand and surge for physical metal. There's a supply shortage literally because it's all been bought up. Not that there's less lockdowns now, there's not as many refineries or even mines closed, but still, because of the demand surge, that's used to pull the supply. And BullionStar has been thinking about moving to a fixed price for silver products.
Yeah.
That is based on a need to preserve stock but while offering it at the same time, and also to reflect the huge demand in the physical market and the supply shortage. So it's really like coming up with an equilibrium price, which is based on what we're seeing rather than keeping an eye on what's happening in the COMEX in London. So it's really a divergence in the price that is in the paper markets and in the physical market. As to whether that will happen, we'll have to wait to see. But it could be an interesting development, because if that happened in a number of bullion dealers simultaneously, they could start referencing each other's prices rather than the COMEX LBMA price.
So one of the, many of the dealers here in the United States and many other countries we read are pretty much got cleaned out of a lot of their inventory back in late January and the first couple of days of February. It's even to this day still a lot of the products are out of stock for the everyday buyer who wants to have some coins or some 5 or 10 ounce bars. And so I imagine there's a lot of competition. The coins are made by the mints, and the mints have their schedule of production and they have their allocation. So that market, hey, it's just going to take time. But a lot of these 5 ounce and 10 ounce bars that a lot of people like to purchase, that's a function of dealers such as yourself, JM Bullion, SD Bullion. Those guys go into their refineries and saying, hey, start chopping up those 1,000 ounce bars and produce X number of 10 ounce bars, whatever it is they want to produce. So I imagine that inventory may come back. That's the competition right now that we're seeing is there's the regular industrial consumers, there's the mints that got to grab their silver, but now there's this extra huge, all the dealers themselves are screaming to their refinery, their suppliers, hey, I need to resupply here. Is that a significant amount of silver demand? Do the dealers, in terms of the big pie of demanding those 1,000 ounce bars from the bullion banks, are the dealers now creating extra pressure on that supply chain?
Well, I think so, because BullionStar, along with all other dealers, would be, in the last few weeks, constantly checking with suppliers and with supply channels about where we can source metal, coins on bars, investment coins, investment bars. We actually still have quite a lot of both. As regards silver coins, we currently don't have in stock silver eagles because they've all been bought up. But we have Royal Canadian Mint silver maples and the Perth Mint silver coins, Royal Mint silver coins, and also Piraeus silver bars and Nadir, who's the Turkish refiner, silver bars. But that will all eventually, or maybe sooner than later, get bought up. And we have very good relationships with like Piraeus Hong Kong and Piraeus Germany, and also the Swiss refiners, who sometimes, to a smaller extent, refine silver bars. But it will be a case of the refiners and the mints supplying their loyal customers, such as us, along with everybody else, and they'll have to make decisions on who they're going to supply their stock to as it starts coming in again, as it starts coming out of the refineries and the mintages, the minting.
Alrighty. Now, Ronan, we have another Redditor here called Bud Nacho. Ronan, what do you estimate the Chinese silver reserves are at? I know the government was pro-gold for their people. Do they push silver as well? If so, is the Chinese silver market tightening as well?
That's a great question, but I don't really have that data to hand because in the past, when I've looked at China, it's always been at the Shanghai Gold Exchange and the official reserves of the PBOC, the China Central Bank. I'd have to go and check that, but I know that there are quite a lot of high imports into, every month there are the Chinese customs database produces statistics on monthly gold and silver imports. And I know that silver imports are quite high, always into China and India, because of, in India more so, they have a lot of investment silver. I think in China, investment silver isn't really as popular as it would be in India, but a lot of imports of silver into China are for industrial purposes. But what I can do is do a little bit of background about that and maybe post a quick post on the Reddit, your Reddit Wall Street Silver in the next 2 days.
Awesome, thank you. That would be awesome.
Yeah. Okay.
Hey, Ronan, I did a graph a couple of days ago where I was looking at, the global supply from the silver miners, what they're producing. And it seems like back in 2015, 2016, all the global silver miners combined were producing about 900 million ounces a year. But ever since 2016, it seems to be ticking down a little every year to the point where it's now almost 100 million ounces fewer last year, down to 800 million ounces. And this trend started before the COVID virus really took off. So I think it's more than just COVID. There's obviously the mines are getting smaller. The best mines have already been mined out. The easy silver has already been mined. The yield per ton of ore, those seem to be declining gradually over the years. And I've seen some other reports. There's actually a deficit out there overall in terms of the amount that the industrial consumers are consuming. With the new demand from solar and electric cars, the jewelry versus just the total market seems to be consuming more silver now than the miners are producing, and that we're getting back from recycling. So there's this deficit figure out there, and I got to think that deficit is coming. It's being made up by it's just gradually disappearing from somewhere. Do you sense that tightening out there in the market, that just finding the real physical, this sort of gradual decline from the miners is starting to show up in the noticed market?
When I was looking at the situation in London, as a bit of a background, I also looked at what would it take, or where are the banks going to get more silver? So as you said, there's about 26,000 tons. I usually think in terms of tons rather than millions of ounces. But over the last few years, the mine supply of silver, both primary silver producers and the silver that comes from other types of mining, has in total gone down over the last few years to around 26,000. I think there's about 5,000 tons in recycling. But overall, still, that is in a deficit, because the Silver Institute came out with their new report, which is written by Metals Focus. It was a few days ago. And everywhere you look in that report on the Silver Institute website, there is just investment demand is increasing, industrial demand for silver is rebounding. There are a lot of new uses for silver, like in solar, in batteries, in the electric car sector. So in the gold market, there's always been a suspicion that central banks, because they hold huge gold reserves, were able to lend gold. Well, we knew they were lending gold, but there was always a suspicion that they're lending a lot more gold, and that gold has gone out in the market and it can never really be replaced, and that the banks on their balance sheets say they still hold X amount of gold, when the reality is a lot of that might have been leased out or sold and never can come back again. Central banks don't hold silver as a reserve asset, but there are government stockpiles, usually very discreet, around the world of silver. So it could be the case that some of those strategic stockpiles are being eaten into, maybe behind the scenes, and that silver is hitting the market. Because, as you say, if there's a deficit, it has to come from somewhere. Again, you said price dictates everything. Usually the price would go up to draw out silver from wherever it's in stockpiles. But if the price isn't going up, and if they need to firefight, that there could be government stockpiles. Because it's not a reported category, it's very difficult to know which countries have silver stockpiles. Mm-hmm. But something interesting to keep in mind that there might be strategic stockpiles. I know the US had a strategic silver stockpile in the late 70s, early 80s. I don't know, would you know if that's still the case?
I do not.
Okay, I don't know either. Or maybe Russia. I know Russia has platinum and palladium stockpiles, so it's not impossible that they might have silver stockpiles as well.
That's right. Now we have another Redditor here. It's called _Banks. My question is, when big retail silver dealers order from producers or wholesale, they hedge their position by opening a short position the same size of their order to stay market neutral. They are long in physical, off market, and short into the paper market. Does this have a negative effect on the price of silver in the paper market?
I would think it would. I'm not sure whether that is as prevalent as the person who asked the question thinks it may be. But I don't think that the retail dealers would really hedge a position on futures markets. Maybe the wholesalers do that. I know a Market Gauge have trading divisions, and they probably do that. But the retail companies don't do that, as far as I'm aware. But I would think, just thinking about it, it shouldn't really, they wouldn't be big enough to influence the price, I don't think, even if they went long on, so you're saying they're going short on the futures market, long physical position.
Yeah, they're saying when big retailers, silver dealers order from producers or wholesale, they hedge their position by opening a short position the same size of their order to stay market neutral. So he was asking about that. Does that have a negative effect on the price of silver if they are long in physical and short in the paper?
I don't think so, because the cumulative size of those hedging positions would be very tiny and be dwarfed by the speculative position that you see in comics volumes.
Okay, awesome. Now we have a few more questions here for you. Music Maker 99 is saying, from your analysis, the whole of the SLV is stored in London, ? If so, why?
Well, traditionally, gold and silver vaults, the most important gold and silver vaults of the world have been in London, because London was the trading capital for gold and silver back for a few hundred years. That remained all the way through to the 1960s, 1970s, 1980s in London. And just really the vaulting infrastructure is in London. And other countries never really had a tradition of vaulting gold and silver, because London was always the world's gold market, the world's silver market. And the banks that run that market control the whole supply. Going back to the time of Rothschild and the Midland Montague and Sharps Pixley. So it's really a case of the infrastructure is in London, so the ETFs choose to use those custodians that are based in London.
Awesome. That was actually a really good answer. Now, more importantly, we have, like for me, a personal question for me, Ronan, is what got you into BullionStar? What got you into silver? Like, was it when you were a kid, or like what got you into your career?
Well, I remember back in around 1999 when the internet boom was happening. I'll go back slightly a bit further. One of my first jobs was actually in Ireland, in Dublin, and I was in a stockbrokers, a small private client stockbrokers. I was a research analyst there. And then, so that really gave me a flavor for buying and selling stocks, and personal interest. And then when the internet boom began in around 97, 98, I started buying various stocks like everybody else, Yahoo, AOL, Nokia, I remember.
Oh, smart.
Yeah, at the time. And then when that internet bubble sort of blew up at the beginning of 2000, 2001, and then sort of ebbed again, I was looking for what's the next interesting sector. And various, I remember there was a report called The Daily Reckoning, caught my eye, and they were always talking about gold and silver. So that brought me an interest in gold and silver mining stocks. And then I started getting an interest in James Sinclair, and his website at that time was very active with a lot of very interesting articles from the man himself, Jim Sinclair. And that gave me an interest in gold and silver. And from that, I started buying. I remember I bought 20 Krugerrands over about a 2-year period in London in 2003, 2004. Kept those all the way up till around 2009 when I had to sell them to help renovate a house. And I also bought a 1,000 ounce bag of silver quarters bought it from Goldcore actually. And that was like, you couldn't really lift it. It was, those 5,000 quarters in a bag.
Yeah.
From buying Krugerrands and silver quarters, it gave me a real interest in the bullion industry. And in August 2011, there was a really good conference in London organized by GATA. It was the GATA conference in London. When I went along there, I was expecting it to be a very small, low-key affair with a few people like gold bugs, but it was like really professional, huge conference. And it had like Jim Rickards there, James Turk, Jim Sinclair, Chris Powell, and there were just a huge amount of people from all over the world there.
Wow.
Professional. And that really gave me a whole new insight into the bullion industry. And I actually went from London, I went back to Dublin for a while and got to know the guys in Goldcore, and they offered me some work just because they knew I was interested in it. It was just a hobby, really. And then as I mentioned earlier, I went then to BullionStar in Singapore. So that's really the journey.
So Ronan, do you have a personal stack of silver that you keep? We're going to start. Hey, Ivan, we need to start whenever we have a guest on, one of the requirements needs to be they have to show us their stack. I think that would be to have credibility on our AMAs, any of our guests, they need to show us their stack first.
Well, when I was in Singapore last, I bought one of everything on the 1 ounce variety, which was like, Philharmonic, Royal Mint, Britannia,
Nice.
Maple, and some of the less known ones. I bought actually a Star Wars Yoda coin.
Oh, nice.
Yeah, it's in a box. And it was
I just noticed on JM Bullion, their Darth Vader and Boba Fett silver 1 ounce coins also sold out last week. So
because they tend to be, they're more than the spot price, even when there's no high demand.
Yeah.
Because in a box set, it's a rarity. But so I have the Yoda silver coin, and actually just this week we were talking about for Chinese New Year, BullionStar is giving all their employees a 1 ounce silver coin just as a token for Chinese New Year. So I haven't got my hands on that yet, but it's on its way.
That's pretty awesome. You guys are giving gifts.
Yeah.
Right? That's pretty cool.
yeah.
We actually were one of the first companies in the world to offer salary in gold. So back in 2014, 2013, I think, we can, instead of accepting our salary in Singapore dollars, we can opt to have it in gold coins, or gold, any gold up to the value of your salary, small gold bars, gold coins.
Nice.
That's incredible.
That's actually, there's a very...
How do they deduct taxes from that?
There was a news report back in, I think it was 2013, from one of the Singapore TV stations. They profiled that, and it's a short 2-minute clip on YouTube what I'll do is I'll post that on the Reddit board as well.
Awesome. Did you make a username or an account yet?
Yeah, I used to have a Reddit account, but then a few weeks ago I changed to one which it's called row_manly BullionStar.
Perfect.
It was like a 20 character limit, so I couldn't put in my whole name. What I didn't realize was that when you start with a new account, you have to build up your karma again.
Yeah. we can help that. We can help.
We can help you post something, and we'll pin you at the top.
Yeah, we'll put you right to the top.
We'll get you to a few hundred real quick.
Well, that's great, because I started off obviously with 0. I think I've got up to 30 now. But I found it on some of the boards, you can't post unless you have
100 or. Yeah, that's right. So we got a few more questions here for you, Ronan. Steve AG is saying, Ronan, the bullion banks push unallocated silver as a cheaper way to own silver. These accounts are also claims against LBMA silver. Is there any ability to estimate the claims from these accounts?
That's an amazing question, and that really is the crux of the whole market, the crux of the smokescreen that we always see happening every day and that's been around for years. Back in the 1980s, the unallocated market arose out of nowhere, because before that, there was no such thing as unallocated gold and silver. Banks and all their customers traded physical gold and silver, either in the wholesale market or the retail market. And then mysteriously in the mid 80s or 1987, when the LBMA was established in 1987, this new concept of unallocated gold, unallocated silver came out of nowhere. And literally, as the question mentioned, it's a claim on a bullion bank for an amount of gold or amount of silver. It doesn't necessarily exist. What it means is that the holder has a ability to claim on that bullion bank for, like, say, 10,000 ounces of silver. They can say, I want that allocated in a vault. Unallocated gold and silver positions are less expensive than allocated because there are no storage fees. This is the way LBMA pitches, but obviously there are no storage fees. They're not storing anything. And all they do is charge a sort of account maintenance fee. So I would say that in both gold and silver, there are multiples more volumes, dollar volumes of these outstanding unallocated positions than the underlying physical gold and silver. And probably if we did get our hands on those figures, we'd be astounded at the magnitude. But it's difficult to know because it's so secretive. The London gold and silver market, the LBM markets, are totally opaque, totally non-transparent. They will claim that they're transparent, but they're actually the opposite of transparent. So,
Ronan,
if we got those figures, I think the whole market would blow up the whole charade.
You know, a lot of people have been, people who I follow on Twitter and in our own forum, in our own community on Wall Street Silver. I've seen some pretty prominent postings about the prospectus for SLV and how it differs from some of the more transparent funds like Sprott, for example. Have you dug into the prospectus of SLV in terms of how they classify it? Or a lot of people seem to have some concerns. I don't know if you've even dug into that prospectus as to what they consider as silver in the trust or not.
As of yet, I haven't, but it's something that I've been meaning to do, especially in the last week. Yourself and various people mentioned the same thing. So I will try to do that quite soon, and it would be nice to have an article about that. I did look at the GLD, the gold, the Spider Gold Trust prospectus, and that is like a minefield of confusion. I've heard that the SLV one is pretty similar, i.e. it's very confusing, and the way that they phrase the words about allocating and how much time they have to allocate the gold and silver. And the APs appear with baskets of shares, and they change that into physical. I know that for the big concern is that they were using sub-custodians at the Bank of England, and that's something that I highlighted back in April and in August in various articles, where the GLD was, it's very unusual that the GLD, they use the HSBC vault in London. Well, not a very non-small percentage, it was like 5-6% of the GLD gold was being held in the Bank of England for 4 or 5 months. And that's sort of a red flag. Why is that happening? But even on a bigger basis, SLV uses all these sub-custodians, as you see, like Brinks, Malcolm, Mitt, and Lomas. And I think it's like 72% of the silver I calculated on the bar list is not in the JP Morgan vault in London. So SLV's custodian is JP Morgan, but 3/4 of the silver isn't in the JP Morgan vault, it's in the vault's sub-custodians.
Yeah.
And
it seems like it's almost designed to be confusing. I mean, if you look at if you do get a chance to look at I'm not a lawyer, and thankfully, and I've tried to read it. It seems, and I've seen other people highlight certain sections. It seems like the way the SLV prospectus is written, it's designed intentionally that nobody can be blamed, nobody can be sued, nobody has any liability. If SLV were to fail completely, even if let's say they've only got 80 or 70% of the silver they claim, you've got no recourse to go after them. All they're required to do is give you back your original investment, minus their investment fee, minus their management fees. It even says that in there. I saw someone highlight. It seems it's written to be as weaselly as possible.
Yeah, there are so many risks with buying a physically backed ETF in the first place, because one, you can never convert your units into gold or silver, because you don't own any gold or silver. You own a unit in a trust, and the trust owns the silver or gold. They also won't tell you where those vaults are. They're more secretive about gold and silver, but literally, like, you can't ever go and see the vault because you don't know where it is. They won't tell you where it is.
And I think that's why Sprott has so much more confidence, I think, among investors, is that you can physically go withdraw your silver if you own enough units. I think the number is 10,000 ounces. You can actually, they will let you come withdraw your silver and take it wherever you want. And people have tested them. So, I mean, that's just one of the minor differences that I think within our community, we always try to, encourage Sprott's PSLV as opposed to SLV.
Yeah, no, definitely Sprott's PSLV is as regards an ETF or an exchange traded physically backed product. It is the gold standard or the physical standard, the silver standard. It is nothing like these other opaque ones run by banks. And also, the problem with SLV and GLD is that the custodians and sub-custodians have contracts between each other. So you have a sub-custodian contract and a custodian contract. And they're just like legal reams and reams of pages about their obligations to each other or their lack of obligations to each other. So if there was a case of silver not being in a sub-custodian, what's going to happen? Like, it's between the custodian and the sub-custodian.
Yeah.
Unit holders are way removed from that.
Now, I'm really wondering, how does this all get untangled if we reach that? I'm just going to speak hypothetically. Let's say silver gets up to $30 an ounce and starts breaking into some 8, 9, 10-year highs, and the media starts writing about silver, taking off, and all of a sudden, just the paper market, as people just start buying it, thinking, fear of missing out. What happens when SLV on paper now owns 103% of all the silver in London? I mean, how do they explain that? Even with this whole, I'm just trying to. No, we haven't reached that point, so it's just pure speculation. But how do they explain that and still trade the market?
What they could do is change the clauses in the prospectus to say that they can hold silver in a subcustodian which isn't in London, which is in a different country. Because I remember looking back in the summer when...
yeah, but what silver are they counting then? It's no longer 1,000-ounce silver bars. It might be grandma's silver spoons that they're counting as part of their silver holdings in the trust.
Well, that's a good point, because even right now, the LBMA statistics of 33,600 tons, that refers to all the silver in the London LBMA vaults in any shape or form, including like limited to 1,000-ounce bars, any other smaller bars, and silver coins. That's all part of the figures. Doesn't include silver spoons, but you never know. They might get desperate.
Now, sorry cutting you off there, Ronan. We have a couple more questions here. His name is Glenview Randy. Will silver future buyers that take delivery of February contract provide insight as to what will happen when March contract expires?
Well, if you had enough funding or enough cash to take delivery of a 5,000-ounce contract, what will happen is you get delivery of a warrant. It's an electronic warrant that says you have title over a bar of silver in one of the vaults in New York, one of the COMEX vaults. But you don't have a choice in which vault that will be, because it's the short holder who issued the contract. And you're the long holder who stopped the contract. You get a title to a bar, but only if you take that bar out of the vault will you see that it's an easy process. You'll see whether it's an easy process or not, and whether it's actually possible to do that. I think the vaults make it a bit difficult by saying that you have to organize your own security transport and you have to get it insured between the vault door and your home address. But if people started doing that, taking physical out and putting it on trucks to bring to their own house, if that happened during February, it could be a good test case, seeing what might happen in March. There is also the micro silver contract in COMEX. So people, I'm not really up to date on that, but if that is that physically settled? If it is, then you could try that.
Well, no, I actually looked into that. They give you, you have to have, if you're trying to, at the end of delivery on the mini contract, which is 1,000 ounces, you have to have 5 of them to actually take physical delivery.
Okay, so it's the same thing.
If not, they give you some sort of receipt for, okay, you have 1 out of 5. As soon as you got the other 4, let us know and you can come pick it up.
That seems to ring a bell. There's a concept that they try to introduce in the summer on the gold contract. It's called ACEs, Accumulated Certificates.
Yeah, that's what it is. Exactly. ACEs. I said receipt, but you used the correct word.
Yeah, so ironically, it's called ACEs. So you got your 5 aces, 5 aces. You got a bar. 5 aces, you can bankrupt the house.
Now we have one more question here for you, Ronan. It says, his name is Jimmy James. I'm a first-time silver buyer. My question is, I've seen a lot of hype in the media and in the Reddit post that silver is going up to $1,000 an ounce. How strongly do you believe in the possibility of that? Because it feels like a long shot to me.
Well, the price diverging between the paper markets and the physical markets is already happening to an extent, because we can see huge demand, limited supply in the physical market, and consistently you got the price in COMEX just doing its own thing, nearly going to 30, then going down to 26. Just again, it's in a range now because it's sort of being kept in a range, like the way gold was being kept in a range a few months ago in the 1800s, and doesn't really, it's not reflecting anything that's going on in, with the Fed expansion and the Biden fiscal expansion. But if there was a break in the pricing between the two, you could pretty quickly see that the paper markets might collapse because of the fact that they're not able to continue the charade, and then the price might take off. But it all depends on whether some sort of weakness in the paper trading scheme can be uncovered. I put out a tweet, I think 2 weeks ago, a week and a half ago, saying that the Achilles heel of the bullion banks is the availability of physical silver in London. Because if they hit a wall, as Jim said, like with the SLV, that could just trigger a whole chain reaction. Not only SLV, but all the other ETFs can't get their hands on physical. Then nobody will have a confidence in trading those products, and they could collapse. Then that could just set off a crisis in.
The way I kind of referred to that was the ETFs could accidentally corner the market. Accidentally. I mean, no one's planning on it. It's not a scheme by the Hunt brothers. It's just the sheer collective magnitude of Sprott, SLV, all of them combined could just own 95% of the available silver. And then all of a sudden there's not enough for industrial consumers, and boom, market cornered. Who gets the silver?
That's a great way.
Who gets the silver?
That's a great way of putting it. I'm jealous that I didn't come up with that one myself.
The accidentally
cornered. Yeah. It's great.
That's awesome. Now,
Ronan, should I trademark that phrase?
Yeah, you should copyright it.
Now, Ronan, what I asked you earlier, like what got you into silver from the beginning in the 90s and everything like that. What do you see yourself doing in the next 5 years? Like, what are your goals and plans now, working towards BullionStar and everything?
Well, I think in the next 5 years, I'd like to still be with BullionStar. I'm actually not based in Singapore right now, but I'm thinking about moving to Singapore to be in the BullionStar head office there.
Nice.
We've actually expanded in the last 2 years. We've doubled the size of our shop and showroom and vault. We have an integrated vault in Singapore, and so the vault is now expanded. The showroom is now expanded. We've got a lot of new offices above on the second floor. We have safe deposit box facilities. So we're one of the biggest regional bullion players in the retail market in Asia, Southeast Asia. We have an international expansion plan. So I think it's good I'd like to stay with BullionStar. I hope that in a few years, I will be writing about the way that the gold and silver price broke away from the paper trading scheme, and that will be a whole new opportunity to write about how the physical markets and physical exchanges will be work with other bullion dealers to create a physical exchange, maybe.
Now, Jim, do you have any last questions for Ronan?
No, I think we're at about an hour and 10 minutes. I don't want to overwhelm the length of our videos that we're uploading to the YouTube channel. But let's definitely have.
It's great. Thanks for the invite.
Ronan, I love your articles. If you write some more, send me a link to them, and we'll try to get them a little bit more publicity on Wall Street Silver and on Twitter. You obviously know what you're talking about, and I'd love to have you back on in a month or two if you come across some more good data.
Definitely.
You're clearly a data guy who understands where the silver is and who owns it. And if you get a good update in the future, we'll have you back on.
Yeah, no, I think there will be fireworks in the next 6-7 weeks in the silver market. It'll be great.
Very interested in March delivery numbers. Who stands for how many? Let's maybe, if you get any good insight. I know it's a gradual process throughout the month of March. Who is the number of contracts standing for delivery? And if we could look at any trends, for March of 2021 compared to previous years, as you tease out that data, let us know and we'll have you back on.
Yeah, like that data usually starts coming out on the last business day of, I think it's first delivery intention day so it'd be like the 27th of, depending on so the last business day of February, we'll start seeing that. Usually the first day is a big spike.
Uh-huh. Well, let's look at that trend of this March versus previous Marches and see if, are we up 400%? Maybe we can make some fun projections as to how bad it'll be.
Yeah, no, that's great. We also quickly, I was just going to mention, we work with a guy called Nick Lard, whose gold charts are us. We're one of his subscribers, but he makes amazing charts. He can put visually all that data, and it just really jumps out at people.
Yeah, we like pictures. We like pictures with lots of colors because we're simple people. We don't like long, complicated words. Lots of illustrations.
One thing I was going to just quickly, one very quick question. You know the way that Wall Street Bets has the little cartoon guy with the yellow hair, and you've got a guy with the silver hair.
Yeah, we stole that and copied it. We will admit to that.
Yeah, we copied
that. So should we be referencing more your guy with the silver hair rather than the guy with the yellow hair?
Yeah, the silver only. Okay,
we'll change that.
Yeah.
Awesome. Thank you so much, Ronan. Thank you so much, Jim. It was a pleasure having you guys on from the Wall Street Silver community. And then we'll hope to talk to you guys soon. Of course, we will talk to you soon. But yeah, we will. It's a huge pleasure having both of you guys on.
Thank you.
Awesome. Take care, guys.
Bye-bye.
Bye-bye.